So yesterday we looked at the introduction to QuickBooks. We looked at the introduction to QuickBooks Online. We looked at what QuickBooks is about. So I guess before the class starts, we should do a review of yesterday's class so that at least in favor of those who did not. So if you are taking this class, can you hear inspired by raising of your hand? So I want us to just do a quick refresh of what we did yesterday. And so we carry everybody along. So basically, yesterday we did introduction to QuickBooks. We looked at QuickBooks. We said that QuickBooks is an accounting software that assists with bookkeeping and a whole lot of ancillaries. So it's not just about bookkeeping; it's about accurate track of your inventory, a proper understanding of your payroll, and some of the beautiful features in QuickBooks. So we identified all of them. We also looked at how to set up an account on QuickBooks, which we did the practical aspect of it. Then we also looked at key things like preparing an invoice, preparing a processing router, preparing the sales order, the processing order, creating a new account, creating a new customer. We also created a new supplier, and we looked at how to add inventory. So basically, today we will be looking at inventory workflow. Today we'll be looking at inventory workflow. When you receive your inventory, how you go about it, the records, and so on and so forth. We'll look at how to prepare a journal, raise a journal, make entries, and then we'll look at bank reconciliation. In addition to that, we also do a practical review of what we've learned both yesterday and today, and give tasks to everybody present during the class, which is something you will do and submit. It's something you will do and submit before 10 a.m. tomorrow. So at the end of this class, everybody will be getting an assignment. So well, I don't know, we intended mailing the assignments, but we discovered we have 538 people on the group chat and 403 persons registered on the Google form. So there's a gap between those who registered, a very big gap between those who registered and those who are on the game. So I'm guessing maybe we can do the two, put the assignments on the group, and we can also put the assignments on the group chat, and then at the same time we'll mail it to everybody that's interested. I think that's better. So having said that, we're going to give a 10 minutes. We're going to give a 10 minutes timeline for all these people who are finding it difficult to join the class. So that's once it's 20 minutes after 7, we'll start. And whoever is not yet in the class by 20 minutes after 7, the person will just have to watch the video and catch up. So we'll commence officially by 20 minutes after 7. Thank you very much. Okay, so yesterday we created an account. So if you're not in yesterday's class, you can go and look at the video. So today we'll be logging in, and then we'll continue from where we stopped. So basically, anytime you want to log in, you have an option to input your password, and you have an option to input your password. Or use the code. So basically, I think I better using the code, because if you finish inputting your password, you will still be sent the same OTP they will send to you. So just receive the OTP once and move on. Then whether or not you want to add the passkey, this is new. It's one of the new features, but I don't think it's necessary. But you can add a passkey. It's fine. I don't like adding passkeys to third-party apps, so that's just the personality. But then if you click add a passkey, then you input your password, or if your laptop has fingerprint, you input your fingerprint. If your laptop has face scan, you use your face scan. Then subsequently, if you want to log into your QuickBooks, instead of inputting your password, you just use your fingerprint and move on. So that's it. Now, in the last class, we looked at software as a whole, and we looked at the tasks, the set of tasks, the ongoing task, and then so on and so forth. We also looked at this dashboard here, looked at all these things, and then including this marketing. We looked at creates. So we looked at all this, and we also looked at the navigation bar containing the create button. This is what we discussed, that it contains everything you want to add. So if you want to record anything new, you're coming to create. So as you can see under the customers, these are transactions related to customers. So invoice, receive payment, statement, estimate, sales order, credit note, sales receipt, refund received, delayed credits. These are all the transactions that has to do with customers. You can also add a customer here. Yes, you can add a customer here. So under suppliers, expense, check, bill, pay bills, purchase order, item receipts, supplier credit, add a credit card credit, then add supplier. Under the teams, you have the single time activity, the weekly sheets. Then under other tasks, this is where you have your task, that task that will remove. If you want to go back to it, to me, it's not necessary. But then if you want to go back to it, assuming this is a full account here, we'll go back to it and handle one of the things here that are important. Not all of them are important. So then your bank deposits, transfers, journal entry, inventory quantity adjustments, pay down credit card, add product or service, and new. So today we'll be looking at, like we discussed yesterday, the entire inventory protocol. So, we are mirroring a trading company, right? And a trading company is a company that buys to resell. So they don't produce. Basically, yesterday we discussed that we have three types of business. And in the three types of business, we said that we have the manufacturing businesses, we have the retail or merchandising businesses, or trading, and then we have the service-related businesses. So in the manufacturing companies, these companies are companies that produce products. We can group manufacturing companies into two: those that produce raw materials and those that produce finished products. So what I mean by those that produce raw materials are those whose finished products serve as a raw material to other companies. Then for those that produce finished goods, there are those whose products are going direct for consumption. So I'll give you an example. There's a company we call Poly something. I think it's Polycap or Polythicap, something like that, in Ikeja, in Lagos. So the company produces one of their outputs, their inventory, their finished goods, is this container, this plastic bottle. Now that plastic bottle is their finished goods. To them, it's a finished good. But to people that are selling liquid soap, it's a raw material. To people like Apadom that produce bottled water, it's a raw material. All right. So they are a manufacturing company whose finished goods are adopted as a raw material by other manufacturing companies. Now, in the same vein, we can look at it from a direct flow. Let's use flour and bread, for example. So flour is a finished product from a flour company or a flour mill. And it's also a raw material for a bakery that wants to bake bread, cakes, and so on and so forth. So that itinerary is whole and complete in its entire. Now, when you walk into your QuickBooks for the first time, this is let's say you've created your account, everything, and then we had a scenario where you came to the office and then it's time for you to make your entries, right? So as a new business that is into inventory, your business is into inventory, you buy, sell, and so on and so forth. So the first thing you're going to do is to create your inventory, the inventory you want to buy and sell, actually. So you come in here and go to click on plus, come to under this list of orders, come to add product or service, click on it, and you get to the place where you need to add your inventory. So while we are waiting for QuickBooks, because it will obviously waste our time as usual. So now, this is how you add a new inventory. So yesterday we added Fanta, so today we'll be adding, let's add Coke. It's an inventory item. There are three things here. One is an inventory item, one is a non-inventory item, this is a service, and this is a bundle. If you select an inventory item, it's going to be, it's more like the way you bought it, that's how you're selling it. Select inventory item, it's the way you bought it, that's how you're selling it. If you select non-inventory item or a service, it means you don't want QuickBooks to monitor the inventory flow. Service is usually meant for services. Maybe your business is rendering services while still selling products. Let me give you an example. You might be running a warehouse. Where maybe in the warehouse you sell motor parts, and you sell motor parts, keke parts, that's Marwa parts, Okada parts, and so on and so forth. So now, as part of your business, you can have the inventories that you're selling, that's the parts and so on and so forth. Then you can also have the services like if you send one of your staff to come and fix it for the person pays this particular fee. If you send somebody to go and if the car is damaged and then your tow truck is going to go and bring the car, it's a service. The person pays a particular fee. So these things are services, and QuickBooks can also record them. In as much as yes, you're a retail company, you also have full authorization to still offer ancillary services. So that's why the services are here. And if it's a service item, you identify it as a service item, put the price and so on and so forth, and it goes up. Now, I want to show you the difference in the interface. When I select service here, when I come down here, I'm seeing it as a service now. This changes to income account services. The description is whatever I tell it is. The price is this. Now, since we insisted that we are a trading company, so the purchasing part will just be here. So the services here and the non-inventory item are almost the same thing. When I select non-inventory item, I'm still going to have the same thing I have on that service. So, like I said, two of them are the same. Now, when I select an inventory item, you come down here and you notice quantity as at today. Then today's dates. Now, this initial quantity of on hand is, people used to confuse it with so many other things, but the best belief here is that this initial quantity on hand is meant to be the opening balance of that inventory item as at the reporting period. As at the reporting period, the opening balance of that inventory item as at the reporting period. But if you use the opening inventory of that item as at the reporting period, it means you have to record all the inflows and outflows so that you can have the accurate quantity as at date. Let me say it again. What you are supposed to record here is opening balance of the inventory. That is quantity, not opening balance of inventory as per amount. Opening balance of this particular inventory here as a quantity. Now, if you want to start recording from today going forward in QuickBooks, you don't want to bring in previous months, previous days, and so on and so forth inside your QuickBooks, it's fine. You put the opening balance as at today. If you want to bring in previous records, maybe you want to bring in all the records of 2026, then the quantity here should be the opening balance as at January 1. Opening balance as at January 1, that's the quantity that is going to be here. Then the dates, if you are starting today, you put today's date. If you are starting January 1, basically you want to bring in all the transactions that has to do with this inventory between January 1 and today. You come to this as of dates and put January 1. Otherwise, put today's dates. So this is Coke. So the SKU is not necessary. Category, it's under Coca-Cola. We created category. We'll show you how to create category when we go to the inventory part, I just want to make 1 or 2 points here. Then initial quantity on hand, we are assuming that we are starting 1st of July. So the initial quantity of hand as of 1st July is 1,000. So this will be 0701 2026. 0701 2026. The other point is reorder quantity. Those of you that are accustomed to cost accounting, there's what we call reorder quantity. The quantity at which, if the inventory gets down to, the company will need to reorder. So it's a cost accounting calculation, be a management accounting calculation, whichever one. But whatever is the reorder quantity, we put it here. So I'm estimating that the reorder quantity for this item is 200. Then your description should be inventory sales. Okay, so normal price of Coke is 500. So purchases of beverages. Okay, so we are assuming the time price is 300. So this the preferred supplier is not a bad thing, but I don't think you should select a preferred supplier and you should select a preferred customer. I don't think you should do that for any of the inventory. Now, the reason is you raise an invoice without identifying the supplier. QuickBooks will automatically believe that you purchased from this person that is a preferred supplier. And this person's account will receive the hit of the inventory you purchased. So there's no need to select a preferred supplier. Just leave it blank. But if you need a preferred supplier, you can select any of the vendors here, or you can click on this add new. Another form will come, you fill the details of the vendor, and it will reflect back to this place. You select the vendor and move on. So that's for how to set up an inventory. If you want to add the picture of the inventory, you can click on this add image. I've shown you guys how to add an image before. Click on the image, find out where the image is on your computer, and go to your desktop, your downloads, anywhere that you hit the image, your pictures, wherever it is the image is. Go there, find the image, put it, click on the image, click on open. The image will appear here instantly. It's snap. So the image will come in. And you click on save. So we have save and close and save and new. Save and new is you save it, and save and new is you save it. A new form will come up because you instantly want to record another inventory. Save and close is that you are done, so you save it and you close it. So that's the difference between save and close and save and new. Now the next thing we'll be looking at is, as you can see, the inventory the one we did yesterday, Fanta. From our transactions yesterday, our balance is 8 pieces on hand. It's 8 pieces on hand. So anytime you come here, QuickBooks will be showing you that one item is running low on stock. And when you click this place, it will filter for items running low on stock. Sure. So if it is 10, 15, 20, 30 inventory items that are running low on stock, all of them will assemble here. So this is one of their updates where you can instantly be ahead of the game, in control of your inventory. And you know, if you're running a warehouse and there's nothing bad as something you sell back to back, people will come to your shop, and that is when you are discovering that you no longer have it. So QuickBooks created this reorder quantity feature to keep reminding the business owner that a selected number of items are low on stock and you need to stock up. Because for a trading business, the inventory is the business. If you don't have inventory, you don't have business. For a trading company or a merchandising business, the inventory is the business. If there's no inventory in your shop, you're not doing anything in the market, you're just passing time. So in the same vein, In yesterday's class, we discussed about bulk additions. We discussed about bulk additions, and we said that during bulk additions, you can either add one or you do batch imports. So when you come to this place inside products and services, under this new product, don't click the new product. Click the drop down arrow beside it. It's not this place. This drop down. That's where you click to show you this list. Come down here under batch imports and click on batch imports to open this place for you. Now, when it opens this place for you, you will start filling in the blank spaces one by one. If you have a list, you can just go there, copy it, and so on and so forth. If you don't have a list, you can just take your time, fill it. When you are done, you click save, and it will automatically. So we are going to do an outline of 6 different inventory items for batch imports, and we're going to do 6 different inventory items to show you how this works, and after that we'll close this place. So we've done Fanta and Coke. I think the next thing we should do, we'll do bottled water. Let's do bottled water. Which bottled water should we use now? Aquafina. And 50 cl. So category will be water. Item type is an inventory item. SKU not necessary. So please, let's use inventory so I can copy it. Selling price for water is 300. Income accounts, sale of product income. Purchases distribution, purchases account should be purchases inventory. Purchasing costs, let's assume we are buying at 150. The expense account should be cost of goods sold. We are assuming that the quantity on hand is 500 pieces. As of date is 07/01/2026. The other point should be 120. So inventory, other current assets. So that's all. The next one we'll be using is Maltina. The category will be malts. The inventory item, the item type will be inventory. SKU is not applicable. If you have an SKU number, you can put SKU. I chose not to use SKU, but if you want to use SKU, it's fine. You can call this 001, 002. So I'll copy this. Maltina is 800. So we have a sale of product income. This should be purchases. I'm sorry, I'll copy this. Use it here. And then maybe we buy Maltina 500. I'm just assuming. And then quantity on hand. Let's assume quantity on hand is 1,000. As of date, copy. And then we're assuming the other point is 100. Same inventory account. So the third one. Third one might be Mirinda.
Not to them, but they are normally that is assembly line.
We can classify it under Pepsi. Call it an inventory item. We can call this one 004. Oh, this is not, you know, copy this, copy it. Anyway. So, Miranda is 500, like Coke and the rest of them. This will be the sale of product income, uh, purchases of inventory. You can even copy this. All these ones that are supposed to type the same thing everywhere. Copy it. And so we're assuming we buy 300. Then for the cost of sales, it's still the same cost of sales. Our quantity on hand, let's assume 900. Same date. We are assuming our order point is 125. The same inventory parentheses. That's so let's put this three. Let's put this three. So as you can see, the audit history is saying 3 products saved. There was one we did the other time that 5 of them failed. So yeah, so this is the history. This then we saved 1 and we've saved 3 now. So if it shows you 3 saved, it means the 3 of them have saved. Then so if maybe you have like a batch of maybe 1,000 inventory, 2,000 inventory, and so on and so forth. So instead of typing it one, you type them in batches of 30. QuickBooks did a batch of 30 here. QuickBooks did a batch of 30 here because of the software, they don't want you to load it in a way that the thing will not come and start handling. So they did a batch of 30. You have to do it 30, 30, 30. So I'm moving forward. But if you have it on Excel, there's no need coming here to stress yourself. You can just do import from file. You click on import from file. So the first thing is convert it to a CSV. They will write this XLSX here, showing Excel. But for best performance, convert your file to CSV. So they have an import guide here. They have a sample here. So you already have your inventory list on Excel. So what you're going to do is to download the sample CSV file. Now for this CSV file, I've downloaded it. Let me open the file and I'll share you the file. Oh. I just noticed now that our Excel is having 1 or 2 magnets. So we'll pull the file to Google Sheet. But then it's still entirely the same thing on Excel. So yeah. So I'm sharing the Google Sheet tab. Please confirm you can see it.
I will not let you.
You can see it now. So now, this is the sample. They want you to reorganize all your records. They want you to reorganize all your records to fall according to these columns. They want you to reorganize all your records to fall according to these columns. So what are you going to do? Come here. These are your samples, Abby. So you come here. 2 is enough. Wipe this one. You add rows. Add rows. by the number of rows that you need. Then all these ones, I don't think you need this one. I used to wipe this, and I've never had an issue with wiping this. Now, after wiping all these ones now, you leave one row here. You leave one gap here and add your inventory. Maybe you create a new file here. Let me give you an example of what I'm saying. So now, I've left one row, and then we already have Fanta, Coke, Sprite. So maybe the next one we'll have is Hero. We have Live. Maybe we have Budweiser. Okay, we'll take that 3 for beer. So the 3 of them is beer. All of them is inventory item. The SKU, we stopped at 003, so this will be 004. This will be 005. This will be 006. And then sales description, we used sale of inventory. You can use anything you want as long as it's related to the transaction in question. But I prefer using sale of inventory. Please, if you have a question, raise up your hand. Don't unmute yourself without being duly authorized. If you distract me, one of the admins will kick you out. So we are assuming the standard price rate for a beer is 1,500. So we use 1,500 for the 3 of them. So the income account is sale of products. So the purchases will be then the costs. Okay, let's estimate 1,000, the fair cost. Then we're going to cost of goods sold. Let's say quantity on hand. Quantity on hand is 500. Comes in crates. So what is the nearest number divisible by 12? That's 600. 600 is 50 crates. So as of date, we are using 1st of July. That's what we are using. So you have to organize your inventory to. We are typing because we don't have an existing inventory on ground. Otherwise, you just organize the inventory to fill into these columns, then fill in the blank spaces, and you move on. So we have the inventory assets here. Our other point is 100, and we have 100 here. So now, when you are done reorganizing, the reason why you leave one line so that there will be a gap between what was there before and what you have, and then you'll be looking at it as you are reorganizing it. So let's assume you have the inventory scattered, it's not arranged, but then it's a table. You have it in another sheet, maybe somewhere here. You will copy it column by column. Let's assume you have maybe these 3. We have this ones like this, and then this one's next to it. Like it's sharp organized, but not in this order. So what you will do here is copy the first one, the first column to where it stopped. Go to the place and put it. Do you understand? You keep copying all of them one by one, and fill them in according to these columns here. These 2 that you left up here will be your sample. So that when you look at it at a glance, you know when you are doing rubbish and when you are doing something that you are doing properly. So by the time you are done copying all of them to the last one, delete these ones here. Delete them. So since we've deleted them, Since we deleted them, in your Excel, you will see the option Save As. When you see the Save As option, under the options there, you save it as a CSV file. So I'm going to download this as a CSV file since we are using Google Sheets. You save it as a CSV file. When you save it as a CSV file, you re-upload. So I'll say this should be a inventory sheet. So it will be easy to trace inside the download. So we've downloaded. So let's go back to QuickBooks and upload. I'm sharing the QuickBooks page. Confirm you can see it. Okay, so come to the QuickBooks page. Browse. This is our inventory sheet sample for QuickBooks. Oof. When you click on browse, sorry, I was too fast. So sorry for that. Click on browse, you locate it in your computer, look for it where it's entered. Most times, if you did not reset your computer, anything you download would be in your downloads. But then in your own case, you use Excel, so you saved it somewhere. You go to that place that you saved it, and you pull it up. So I've put my own up where I saved my own, and I'll click open, and it's here. So I'll click next. The upload is there. They'll tell you to review the column. So you review it so that you'll be sure. The quantity as of date. Is it this format that you used, or you used a different dating format? So you select the dating formats that you use. Do you understand? So when you are done and everything is correct the way it is meant to be, click next, and it will appear here. It will appear here. Then if there are errors, like these ones are errors, there are errors, come here and correct them. Most times, this expense account will always be an issue because it's a drop down. So most times it will be an issue. I don't know why QuickBooks have forgotten to take care of this. So for your dates, say 07 2026.
Yes. Yes. Sorry.
Yes, sir, I don't know.
I don't have the key. I don't know who's in.
The key.
Yes.
Okay, so if you have fixed everything, click on save, and boom, save. It's going to take a little bit while saving it directly like that than typing it here to save it. It's going to take longer, but if it wastes your time, if you stay like 2 minutes and you're still writing this, you come here and click this refresh, and you can see, boom, save, and you move on. But don't click X for any reason that if it has not told you save, because if you do that and come back, it will write failed for you and you start afresh. So that's that for the batch import of the inventory. So before we go ahead, I would like to know if there are any questions, and let's attend to those questions. Is there any question? So if you would like us to go ahead, please confirm by raising up your hand, so I'll know there's no question. Okay, I can see you. Okay, good. Okay, Antonia wants us to continue. April wants us to continue. Good. Yeah. Oh, Vivian is on this call. Nice. Welcome, ma. Nice. So thank you. You can bring your hand down so we can move on. And bring your hands down. Thank you.
What? The office. Sorry, I don't have the key. About to the voice.
Okay, so I think we are done with inventory, how to add it individually, how to add as a batch,
and how to import the inventory. So the next thing is to set our customers and our suppliers. So go to our suppliers. So you can come here, click on expenses and bill. We are still under all apps, sure. So you click on expenses and bills, and you see your suppliers here. So basically, if you've added a supplier before, this is what it will look like. But if you've not added a supplier before at all, it's going to be a little bit different. Just you have two icons here. I'll just add a supplier icon. That's what will be here. Everything here will be empty. But we've added a supplier in the last class when we were touching key important features of QuickBooks. So let's assume the account is set and you still want to add a new supplier. Come here, this is a new supplier, but you can still look at the drop down here and see import suppliers. The same way it is here for import suppliers, that's the same way you can see it for import customers. See it on import customers, all right? Now, so if you want to add your suppliers one by one, you use the new supplier, click it, fill the form, blah, 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 blah. But then the only thing that is compulsory in this form for both supplier and customer is this one that they call display name. That's the only thing that is compulsory. The rest, if you shall want, you shall fill it. If you don't shall want, you shall leave it and move on. But this form we will not save if you do not fill the display name. So our supplier display name. Okay, we're going to use Vivian as our supplier. So her company will be Vivi's Delights. Allegedly, Vivi's Delights. Then you can fill the email, phone number, and so on and so forth. But email is also important. If you fill the email, anytime you call up Vivian, her email will go into the email column automatically. But if you do not fill the email, it means you have to, every time you want to raise a bill for Vivian, you use your hand and fill the email. Now, we'll still discuss email citations for invoices and bills when we get there. But just know that QuickBooks has a feature where the moment you are done filling an invoice, you can, with a click, you can send a copy of that invoice to the supplier in question. Send a copy of that invoice to the supplier in question via mail. So the supplier receives the invoice instantly via mail. So I'm going to use one of our mail because I don't have Vivian's mail. So I'm going to use one of our mails. Let me use my personal mail. Okay. So phone number CCBCC. This CCBCC is if you are dealing with a corporate company. If you are dealing with a corporate company, that's when CC and BCC is necessary. So you are mailing the marketing department or the purchasing department or the procurement department or whatever terminology the company wants to use to identify people that want to buy products for them. Here you are mailing procurement, purchasing, or whatever clinical department, and you will CC finance. You're not mailing finance to see, it's the person that bought products from you that you are mailing, and you will CC finance. So finance gets a copy of that invoice, but the real people will get the invoice is procurement department. So let me CC welfare results. Now, when you set this up automatically, anytime you send a mail to Vivian, the procurement department's email will receive the email. The finance department will also receive a copy of the email. Just like a normal email, when you send one email and CC 30 people, 3 of them receive one copies. That's the way this works. So the rest of the information, you can fill it. You can fill it, payment terms, account number, blah, blah, blah. Just fill. But then, these payment terms is important because it helps with vendors classification, aging, and details. But if you do not fill anything here, QuickBooks will take the standard bad debt calculator that they use. So the standard bad debt mortality is 1 to 30 pass and watch, that's 1 to 60 doubtful, 61 to 90. I think I can't really. When I open it out, I'll give you the details. But it's rated 0 to 30, 31 to 60, 61 to 90, above 90. That's how it's rated. So when we get there, we'll look at the terminologies they used. So I'd rather not give you the answer than give you a wrong answer. Then the default expense account, you can select an expense account here. You can ignore it. So like I said, all these things are good, they're important, but the only one that is compulsory is the display name. So savings Vivian. Saving Vivian. Then when you save a new customer or supplier, the profile will come up like this. So this all the suppliers, their profile, and blah blah. It's just a summary of the person's profile. Person's summary balance as a date, of a due payments. So it's just highlights of the human being. So that's that for creating a supplier. So the next thing we'll do is to create a customer. If you want to create a customer, go to Customer Hub. When you get to Customer Hub, you see customers and leads. Click on customers and leads. This is a customer, this is a lead. So we already have like 3 customers we created yesterday. Now, when it comes to this customer, the same thing applies to suppliers. We have what we used to create for all our clients. If they don't have database before, we have what we used to create for them. We create working customer bank, working customer cash, working supplier bank, and working supplier cash. We created that terminology internally as OFS Consultancy Services, and we use it for our clients. Now, it helps to simplify operational transactions so that at a glance, you will know all the sales made cash, all the sales made via bank transfer. Then every other sale that is made on credit, the customer will directly be invoiced in the customer's name. The customer will be invoiced directly in the customer's name. So we have working customer bank and cash. I just saw this and I remembered. So we'll go back to supplier and we'll create working customer, working vendor. We create working vendor bank and cash. Create working vendor bank and cash. So this will be working vendor. What's going on? Oh, thank God we have edits here. So let's assume you made a mistake. For example, let's assume you made a mistake. So when you come to suppliers, you made a mistake in the customer's profile. Maybe the customer's name, you did not get it right. Click on the customer. Click on the customer, it will open like this. See edit. So you click on edit and it will pull up this form again. You edit it. Then let's assume the customer said she no longer wants to have business to do with us, so we are owing her too much, or blah 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 blah. Whatever reason, or the customer have relocated to Abuja, she's no longer selling, so on and so forth. But you don't want to have business with the customer again. Come here, click on this drop down, see make inactive. Select make inactive. The account becomes inactive. In the same vein, if you created one account twice by mistake, you can have Okafor Chinedu and Chinedu Okafor, and 2 of them are the same thing. You can have Luashiro Faito and Faito Luashiro. 2 different accounts repping the same person. So come here, click on the drop down, merge contacts. You click on merge contacts, They'll tell you you're merging transactions from this person into who? You select that second person. And you say merge contacts. And it will be merged. And you see working vendor deleted. All the transactions of working vendor will now be filtered into transactions of these market suppliers or vendors. So that's how it's done. The same way you treated this merge customer, that's the same way you treat for the same way you did it for merge supplier, that's the same way you do it for merge customers. It's the same treatment. Do you understand? So you come back, we've shall deleted our what they call it again. So we shall deleted our working vendor. So we go back and create it back. We go back and create it back. So this will be working vendor dash. This will be working vendor bank. Then remember I showed you this import supplier. If you still want to import, the same way you handle suppliers, the same way you handle customers. So when I do a detail of the suppliers, I'm not going to do much in the customer. I'll just touch one or two things and move on. Just two of them are exactly the same thing. So select import suppliers. Select import suppliers. It will give you what are you importing. Are you importing from Google Sheets or are you importing a file from your system? So if you are importing from Google Sheets, you copy the link of the Google Sheets and put it here. You click it. You connect the two of them, you take it to map data, you organize the data the way we organized it when we were doing the one for inventory. And then once you click on save, it will give you approval, it will drop. For import supplier from your computer, you first of all download the sample file here. You download it, you treat it exactly the way we treated that inventory sample file. Treat it like that. Columns for opening balance, column for closing balance, and so on and so forth. Let me open this one. Let me download this one. And then where's our Google Sheet again? I think that Google Sheet will be important for us. Okay, I'm sharing my Google Sheets. See it. Let me know. Please confirm you can see it. Can we see it? Okay, good. So let's move on. So I'll take it back. Madam, please mute your mic before somebody will be forced to kick you out. So this is the vendor sample file you upload. I'm using Google Sheet because my Excel is having an issue and I don't have slides to come and start solving that problem. So this is a disclaimer. All data is for sample purposes only. So as we are now, we don't have data. So we are going to use this their sample data like this now and work. And so we just remove their opening balances and their dates. Remove their opening balances and their dates. And move on. So remember, if you are done on your Excel, don't save. Do save as. Convert to a CSV file. CSV file is easier and faster to upload on QuickBooks than Excel file. If the Excel has XLOS and XLOSX. I don't know the one that's compatible with QuickBooks. And sometimes they used to accept one. Today they will accept XLOS. Tomorrow they will accept XLOSX and reject the other one. So me, I shall know that uploading Excel there is not yet very much reliable. So the one that is reliable is the one I'm recommending. The one I'm recommending is CSV file. So download it. The same way. It's the same way you are uploading your Excel file. That's the same way you are uploading your CSV file. So you upload it and it says not compatible or file not readable or any other rubbish they used to talk when you upload a file that they don't understand or they cannot read. You just come back and shall do your thing. So I've added it. Click next. So as you can see, we did not fill this one. So they said no match. Click next. To bring us here. For you to map your data. When you're done mapping your data, you click on the box. As you can see, 9 of 9 successfully imported. So that's how to do batch import for suppliers. That's how to do batch import for suppliers. Now the next thing we are going to do is I think we should even do batch import for inventory steps. So I will have plenty inventory we can tolerate. Let's do batch import for inventory. So we have plenty things we can play with. Somebody's hand is up. Oh, hey, sorry. Ouch. Oh, my chest, oh, it did not change back. Mapping. Hey, oh, yeah, fine. I'll show the QuickBooks and I will re-upload it again. I'll show the QuickBooks and I will re-upload it again. So confirm you can see the QuickBooks. Confirm you can see it's good. So I'll just re-upload again. I'll just re-upload again. So you click on browse, select your file. You shall know how to locate your file. So select the file. And then click on next. It will bring you to map data. You will confirm that the data is you arrange. This is more like rearranging the row and column to make sure it's matched what they want it to match. So when it's okay, click on next. This is it. Then if you click on this import, it will bring all of them inside. I don't know. Let me just bring it. Don't worry. Okay, 0 of 9. We didn't import it because the data is already on QuickBooks, so that's it. So if you click this import, normally it's going to load and bring you back here. Yes, please leave it as 7. Thank you. So, and then this place you wrote 0 of 9 successfully imported is going to write 9 of 9 successfully imported and show you this. That's going to show you. So that's that for the importation. Then because I could not import the suppliers in QuickBooks presence, I will now have to import the customers so that people will be happy. But the two of them is exactly the same thing. But since people did not see it import, I will now have to import the customer and then so you will see it. So that's all about customer creation, about vendor creation, sorry. About vendor creation. So we'll come to customers. So if you want to add a new customer, you click on this new customer here. I want to add Chinedu. Just Chinedu only. Yeah. So company, blah, blah, blah. All these ones are not so important. So can fill it, can ignore it, can toy with it. Now, if I just remember this thing now. Thank God. Oh. If Chinedu is representing Aquadom Nigerian Limited, what is going to be the display name is Aquadom Nigerian Limited. This is where Chinedu's name will be. So you can call Chinedu Aquadom. Here, if they have more than one person representing Aquadom, you can put Chinedu Aquadom. You know, it's Chinedu from Aquadom that came to buy this. Then the company's name will now be Aquadom Nigeria Limited. If Chinedu is a sole trader or is a small business, shall use Chinedu and move on. Or you can use the business name E-Ventures, Seafly Nigerian Limited, and so on. Whatever the person can say. So that's fine. I'll click save, and that is how to introduce a new customer. So that is it. To just bring up the customer interface. See exactly the way they did it for the vendors. So like I was saying, the treatment you give to vendors inside QuickBooks, it's the same pattern for creditors. Same pattern. Nothing. Same pattern. No changes. I want to do the batch imports now, since we did not do it well the other time. So I want to do the batch imports now. So I'm downloading the sample. I will edit it again. Confirm your screen has changed. Please, if your screen refuses to change, one person should raise up the hand, because when I hear the sound notification that somebody raised up hand, I will come to that screen. So I would this customer, pull it. So delete this. So we are sure going to use what they have. Share is what they have. And that's all. Make sure you are using CSV. Make sure you are using CSV. So it's downloaded. Confirm your screen has changed back. Has your screen changed back? Okay, good. Now we will upload. Click on browse. Customer. So you've clicked on it. Click next. You map your data. All of them is ticking good, Abby. If anyone is not ticking good there, you can check what is going on. Correct it. That's the essence of this map data. Click on next. And there's something here. They said, I plan to send marketing communication to these customers. I will activate this. Click next. So, communication preference, email marketing, and the or not. So now, for those that you have discussed with and they are happy, they don't. You are sure they don't have a problem with you flooding their email with 6 million messages from your business. You mark them. The ones that you know will have a problem with it, that respects their privacy, you avoid them. Complete imports. That's all. But if you did not click this, I plan to send marketing, blah, blah, blah stuff, if you click the next, bring you to this place, and I saying it's already in QuickBooks. Okay. Let me check. Oh, okay. I think the sample data is the same thing for both customers and suppliers. Let me find out. Let me find out. So I want to do a direct comparison between the customer one we did and the supplier one we had. So I'll see if they are the same thing. If they are the same thing, do not come. They are the same thing. So number one is Justin's. Number one here is Justin's. This is Amir. This is Christine. So they are the same thing. So what we're going to do is we'll just have to change names. So the two things that they will check is the name and the email. So gotten it. We'll come back. Go to browse. Only thing. Here we have it. Next. So I will activate this. Select all. And yeah. So 9 of 9 customers imported successfully. So that's how to handle batch imports. So it's entirely the same for both customers and vendors. Entirely the same. So this next thing we'll be looking at is how to make a purchase. Guys, to buy something, then to sell something. I think we'll treat that. So this is already 8:46. We'll treat that way. Then we'll take question and answers before we conclude. Tomorrow will be our last class. I don't want our classes to be stretching above 2 hours. So that if you want to look at the video, you would wake up and sit and watch the video. So now, if you want to make a purchase, want to buy a product, and so on and so forth, we're done with customers, so we should shift first. Remember, I said clicking the plus sign is for making a new entry. notwithstanding what the entry is. It's just for making new entries. So clicking the plus sign is for making new entries. So you walk in. If you are buying a product, make a bill. Make a bill. When you click on bill, the bill will come up. Everything in QuickBooks is like filling a form. It's that simple. Select your supplier. So let's assume we bought cash. So it's working vendor cash. There are no times because it's cash. There's no bill number. You can still give it the bill number if you want. This will be 001. What did we buy? Sorry. This will be the account. Point. Question 0. Looking at the so the detailed description of what you bought. But then still head here and add. Oh wow, they've updated here. That's nice. Very beautiful. So detailed description of what you bought. So what did we buy? What so how much did we spend? So 100 at 300 will give us 30,000. So now when it comes to save, you can click save. If you click save here, it means you still want to re-edit this place. You use the save button if you're having network issue. So you write small, you save, and then you have plenty of things you want to write. So if you write small, you save, you're still editing it. Then you use save and new so that when you click on save and new, it will save this one and to pull up a new bill for you to record another bill. But if you don't want to do any of that, click on this drop down. You will see save and close. Click on save and close. That's recorded, you've saved, and you've closed. Now, when you receive the inventory, come to item receipts and record what you received. Come to item receipts and record what you received. So remember, we said we bought what 100 pieces of Fanta. So we find Fanta first. So we received 100 Abi. Good. Which supplier did you buy from? Working customer Abi. That's all. Okay, wait, I think we're having an error here. I don't know why this is not working. This is new, but this is what it is meant to be. I don't know why this is not working. I think I'll find out why this is not working. And I will revert in tomorrow's class why this is not working. But this is new. But this is the proper way to handle this. This is how to deal with this. So that's fine. Now for sales, so that's for inventory. So you acknowledge the bill, and then you acknowledge the inventory upon the receipt of the inventory, and that's all. Then for sales, you raise an invoice. Sales is just invoice, it's straightforward. It is an invoice. So inside the invoice, select your customer, select what to sell to the person. Let's still sell the same Coke again. So once you put the product, automatically here will come to 1. So if you want to change it, you can still change it to 5, change it to 5 or 6. Then the rate will come in. So QuickBooks does your basic calculations for you. You can just treat it how you want it to be treated, and that's all. So and so on and so forth. So you come to this place, click on save and close, and that is it. You save it. If you want to share, it to the person, probably via mail. We use where is that our Vivian is here. You enter customer mail. So I'll use OFS consultancy services here as a customer mail. So we are on assumption that they bought 100 pieces. So now you will see review and send. Then you will see save and close. So the first thing you will do, if you want to send this invoice to the customer, first click on review and send. So it will close it first. Then the send invoice will now come out. So you now send the invoice. Now I've sent the invoice. I'll go to my mail and show you how the invoice came into my mail. Direct from QuickBooks. Invoice number 1004 from Michael and Sons Nigeria Limited. Your invoice is ready, blah, 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 blah. This is your invoice. It's our company logo. Your 80,000 naira bill. Dear Amaka, we appreciate your business. Please find the invoice detail here. Blah. So that's it. Then remember, we discussed in the previous class when we were setting up the account that when you set up your account, the company's email is the email you use to create the account, because that is the email that will be in all your invoices. The company phone number is the phone number you use to set up the account, because that's the phone number that will remain permanently in all your invoices. I've not seen, I still stand to be corrected, but I've not seen how to change this phone number. I've not seen how to change this phone number yet. So that's fine. So I think that's basically all for the payment, for the invoicing. So in our next class, we're going to do inventory quantity adjustment and refund, because these are the key issues that has to do with operational activities. Then we will do a journal entry and we will treat reports. We'll do inventory quantity adjustment, or let's even handle the quantity adjustment now. So let's handle the quantity adjustment now. So we'll have lesser things to discuss in our next class. So if you want to adjust your inventory, maybe during the course of the audit, you did stock counts and you discovered that there are companies that don't do stock counts at all until month end. During operational audits, the internal auditor wants to come and do operational audit or conduct operational audit, and he will now be the one carrying out stock counts. That's when people discover that the inventory is different from what they have, and then they'll finish explaining themselves, blah 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 blah. At the end of the day, whether you are sharp punishing somebody or not, there is a variance between what the inventory is on QuickBooks and what the inventory is meant to be. So what are you going to do? Come here, click on plus, come to plus, see others, under others, see the inventory quantity adjustments, click on it, it will take you to the inventory quantity adjustments. So you put the product variance, product you want to adjust. So we'll be taking, let's take Fanta. So this is the quantity on hand. But maybe during our account, we discovered that Fanta is actually 70. So change in quantity is 62. That's all. That's all. So instead of inventory shrinkage, it's usually shrinkage when when it is meant to be reduced. It's usually shrinkage when it is meant to be reduced, and it's going to be cost of sales when it's going to increase. I'm looking for cost of sales. Okay, see cost of sales here. So it's cost of sales. The adjustment account will be cost of sales when it is increasing, and it's going to be inventory shrinkage when it is reducing. Then your reason for adjustments will be maybe return goods or any of the reasons here. If any of the reasons here is not suitable, you click on others. Click on others. So save and close, and that's all. Save and close. Now, when you do save and close, automatically QuickBooks will recognize the balance on Fanta to be 70. So when you go to your product, click on sales and get paid, come here, go to products and services. When you come to product and services, you go and look for Fanta. Yeah, look for Fanta. As you can see now, Fanta has automatically increased to 70. So that's how inventory adjustment works. Then the last one is journal entry. Let's handle journal entry now too. This is already 9 o'clock. I did not plan that this class will exceed 9 o'clock, but be that as it may, journal entry will be the last thing we'll teach today. After that, we'll say one or two things before we call it a night. So in journal entry, just treat your journal like your regular journal. So if you want to make a journal entry, sorry for being fast, come to plus. I don't know why it is really well. Come to plus. Under plus, you come to others. Inside others, you will see journal entry. So you click on the journal entry. Click on the journal entry, and it will open this place for you. So it's simple, very simple. The account to be debited is what you record first. So let's record capital injection. Cash is to be debited. Maybe by believing that Michael and Sons introduced 1 million naira into the business. So it's going to be equity. Yeah, it's going to be equity. So that's that. Then, but okay, this is one way to look at it. If you're recording a fresh journal for the day, here you put the description. You can put it here, you can put it here, still the same description. Then here is the name of the person that this journal will affect. This name is only necessary if you are raising a journal on things that has to do with accounts payable and accounts receivable. That is your debtors and your creditors, or your suppliers / vendor and your customer. So if you are raising a journal on customers, for example, you have to identify the particular customer in question that journal should have an effect on his account. So if you are passing an audit journal, maybe suppliers accounts going to have a bad debt, a total bad debt of 6 million. But that's 6 million. Like 4 customers have it, one person has 2 million, one person has 1.5 million, one person has 500,000, and so on and so forth. You are not going to come here and put debtors or accounts receivable 6 million. You put debtors or accounts receivable 600,000, come here and put the person's name, come back again, put the same account receivable again, 1.5 million, come here, put this person's name, come here again and put. That's how you'll be putting it till you list out the number of times. You list it out the number of times there are independent vendors appearing in your documents. So if you're passing a journal that will affect three suppliers, you're going to have three separate credit entries for the individual figure, and then the lump sum of the total figure will now hit the other accounts as either a credit or a debit entry, however you want it to look like. You get, so that's the summary here. That's summary here. So I'll put the description being capital introduced. Yeah, that's all. So you now use save and close to close it. Then there's this import too. If you have plenty journal, you can click on import and still import it the way we imported both the inventory, the purchases, everything, and so on and so forth. You can still import it like that. So I think that's basically what we have there. So we'll do save and close. Then we'll come back and show imports. So if you want to show the imports, it will bring up that import list. So you will need to like select the account. But the issue is that when you want to import journal, there's nothing like download sample. There's nothing like download sample. So you already know the headings here: account, debit, credit, description, and the name. So you restructure your journals to fall under these headings before you import. Otherwise, it will not match. So we don't have anything handy. There's no need stressing ourselves. Move on. So, ladies and gentlemen, we have come to the conclusion of today's class.